All right, good morning, everybody, and welcome to the stock market update. Today is, what is today? June 30th, last day of the month. And we have a lot to talk about because, right now, as we close out the month, the S&P is down 20% for 2022. And that is the worst first half of the year since 1970. That's in 52 years. We also had yesterday Powell speaking at the ECB forum. We had a Fed member speaking, so we'll dive into this. Bed Bath & Beyond had a really bad day yesterday, but maybe even worse for Carnival Cruise Lines. We'll take a look at this. And then this morning, two major economic reports are being released. So we'll take a look at those and see how they are moving the markets. Plus, we're going to tell you why we are not selling calls right now. So we're going to show you some very specific examples. So as you can see, we have lots to talk about. And if this is your first time here, hi, I'm Markus Heitkoetter. This is my head coach, Markus, and together we have more than 48 years of trading experience. And every morning we sift through a mountain of news websites, newsletters, and reports. And then we take the most important news and go live right here to share with you what you need to know as you head into your trading day. If this is your first time here, I know it can be a little bit overwhelming, but don't worry. We have a special video just for you that I'll link to in the description, and that's a great place to get started. All right. Before we get started, Mark, so yesterday I talked to Vivian, and Vivian said yesterday, well, I'm meeting some friends, and I'm going to go bowling at High Five, and after this, I'm going to watch a movie. And I say, really? You want to go watch a movie? What movie are you going to watch? And it's the one that I really, really wanted to see with her. Elvis. I think it was released last Saturday, and I'm really, really curious. I want to see Top Gun, and I want to see Elvis. Have you seen any of these?
No, I haven't. But Elvis should be good. But I'm interested in seeing Top Gun too.
Top Gun, come on. Back in the days. And it's actually, Top Gun is doing really, really well at the box office. I think they already grossed, what, $1 billion or something like this?
Yes. I think it was Tom Cruise's first billion-dollar film too, which is interesting.
Right, and also the studio Paramount. They haven't had a smash hit in forever.
Yeah, I'm looking forward to that one. So you missed out on Elvis, huh?
Well, maybe I can convince Vivian to watch it again. You see, some movies you can watch over and over. So who knows? We might be able to do that. All right, let's switch over to the charts and let's talk about what was happening. So yesterday, not a whole lot. If we switch to a 5-minute chart of the S&P, pretty much yesterday diddling along, which is not surprising.
Sure, and we start the week with a little pullback on Monday, which was to be expected after such a strong week. Then Tuesday, just a huge drop, and yesterday, really a mixed session. The S&P was down just 3 points, not a big deal. The Dow actually up 82 points, which is nothing for the Dow, so slightly positive there. The Nasdaq flat, and so going into this morning. Just kind of pausing after Tuesday's sell-off.
Yeah, but we talked about it. Just indices had a really, really rough year. The S&P is down, around 20%, and Nasdaq year to date down 29%. The Dow year to date 15%. That's pretty bad.
Yeah, those are some ugly numbers for sure.
Right, and we have even some of the darlings that are down tremendously. Netflix, we know that it got hammered. Netflix is down 70% for the year, and even if you look at somebody like Apple, Apple is down. Let's see, what do we have here? Like 22% for the year.
Yeah.
Alphabet, Google's company, also down 22%. Then we have Meta, formerly known as Facebook, so down 51%, and also Bitcoin. Let's talk about Bitcoin for a moment.
Yeah, ugly year for Bitcoin. Down about 58%, and trading back around 19,000. So really, falling back towards low. So it's under the 20,000 mark. And nothing's going well for the cryptos right now. Between the stable coin issues, other Bitcoin related crypto companies just really, folding or having bankruptcy issues. And maybe that's what the market needs, this flush out of these more aggressive risky assets, and then some buying comes in. So I mean, it could be that the cryptos are the fall guy for this market.
Right. I mean, we'll see, and we talked about it. So, where do we go from here? I mean, we both said that it is possible for the S&P to drop down to 3,400. It really depends what the Fed wants to do. And I mean, yesterday, another voting Fed member, Loretta Mester, said that she would support another 0.75% hike, so 75 basis points, at the next meeting that is at the end of July.
Yeah, and I mean, this is where it's a tough job with the just inflation going crazy. The tools to slow down inflation slow down the economy, right?
Right.
And so it's just a balance. Is it going to be too much? And that's what traders are worried about. And it looks like traders are trading as though we're going to be in a recession. But that will be technically decided, I think, in a couple weeks with the next GDP.
Yeah, but this were also yesterday. Powell was speaking at the ECB forum, right? And so he had a few comments there, and I think that the comment that spooked traders is that he did towards the end, where he said, "We are strongly committed to using the tools to get inflation come down. The way to do it is to slow down growth, ideally keeping it positive. Is there a risk that would go too far? Certainly, there's a risk." So kind of he's already preparing us like, okay, be prepared for a possible recession. We are concerned about the inflation. We are not too concerned about the stock market. I mean, this is where the Fed's dual mandate, we have talked about this over and over, is to keep unemployment low and to keep inflation under control. Their job is not to keep the stock market high.
Oh yeah, absolutely. And at this point too, it's not their job, but definitely they need to take steps where that's not their major concern. Yeah, he did say some positive things about the economy, but that's where traders, I guess we just have to see. He did say that if you look at the strength of the economy, households are in very strong financial shape. They've still got a lot of excess savings from forced saving of not being able to travel and things like that, and fiscal transfers. So the same is true with business, with very low rates of default, lots of cash in the balance sheet. The labor market is also tremendously strong, still averaging very high job growth per month. Overall, the U.S. economy is in the position to withstand tighter monetary policy, we think.
Right. So, I mean, this were basically right now, he also is kind of saying, you know what, this soft landing that everybody was talking about, it's probably not going to happen.
Yeah,
So we will see a recession. And again, a recession just means that we have 2 consecutive quarters of negative growth. So it doesn't mean that everything is doom and gloom. But I mean, it could impact the forward guidance of companies. And that's what we will see as we head into earnings season again in a couple of weeks from now.
Yeah, and Marcus, there was something recently with RH. RH, the ticker, they're down 8% pre-market. It's a home goods and furniture retailer. They're lowering their full year financial guidance because of citing a deteriorating economy and a slowdown in home sales. I heard that they issued a buyback. I think it was like 30 days ago. They were going to buy back the stock, which normally companies like to do when the stock's down and they have extra cash. I want to say that they suspended that, right? So that's just one, a perfect example of companies now being a little concerned about this excess cash and now tightening things up and lowering guidance. And so we'll see just how much of that we get in earnings season.
Yeah, so in a moment we'll see what the major economic reports did this morning that have been released and how they affect the markets, and also explain why we don't roll calls or why we don't sell calls right now. But we got to take a look at 2 more stocks, Bed Bath and Beyond, because yesterday down 23%. That's kind of a big move.
Yeah, they got hammered after the company missed revenue estimates, and they also reported a bigger loss than expected. And then there was the announcement that they're replacing their CEO.
Yeah. And then we have Carnival Cruise Lines. I mean, we have been saying all along, stay away from cruise lines, stay away from cruise lines. And yesterday, Morgan Stanley chimed in and gave their outlook. They gave their outlook on cruise lines.
Yeah, I just hammered yesterday with a 14% loss, down more pre-market. They got hit, saying that they cut the price target roughly in half, saying it could potentially go to zero in the face of another demand shock, with Carnival's debt levels being a huge concern.
Yeah. All right, let's jump to pre-market, and then we'll talk about what we do here with our calls. So in pre-market trading, let me actually jump over here to the E-mini Nasdaq, and we see that overnight has been sliding lower, and this is pretty much because of what you said, that Restoration Hardware RH issued lower guidance. Then we had a little bit jump here. This is when the economic reports were released.
Yeah, 8:30 Eastern. There was actually a favorable reaction to begin with, but things have pulled back a little bit since. But the initial reaction was positive. The real item in focus here is that core PCE price index.
Right, so that's the Fed's preferred inflation gauge, and so it came in at 4.7% in May. And if you look at the expectations, I mean, it was expected to come in a little bit higher. So it's still at a very, very high level, but there is this idea, okay, inflation might be peaking, and we also see that unemployment claims are pretty much in line with expectations on what we had in the previous month. So kind of supporting what Powell said, that the economy is still strong thus far.
Sure, sure. And just for clarification, this core PCE is a price of goods and services purchased by consumers. So it's really targeted towards items consumed by individuals. So that's why the Fed keeps a close eye on it. So down a tick from what was expected. I think that was kind of the initial reading. There was the jump, but then it pulled back because we're still at levels not seen since the 80s.
Yeah. So let's see what happens here on the last day, trading day of the quarter and of the first half of the year. But I want to talk about our positions here. And there was a question that I saw yesterday under the stock market update video. And please leave comments and let us know what questions you have, then we can address them. And one of the questions is, why don't you sell calls? So I want to use NVIDIA here as an example. NVIDIA, let me zoom in a little bit. So I got assigned at 195. And this is where we are using the calculator. And we say, okay, so step number 2 would be selling calls. Step number 1 is selling puts with the wheel strategy. Step number 2 is selling calls. So we focus on this. So the stock purchase price, 195. And if you look at this week's expiration, and right now I have 600 shares of NVIDIA, and if I'm looking at a strike price of 195, we can just see how much premium we would get. So I do not like to sell below my assigned price if I can avoid it. I mean, we'll talk about the break even here in just a moment. But if you look at the chain and we take a look at NVIDIA, bring it up, and these are the quotes obviously from yesterday. And we look at the 195 call, then we see that the last traded price is maybe around 2 or 3 cents, the 2 cents here. And if you plug this into the calculator, then we'll see that this is, of course, next to nothing. So right now we're not getting much premium. Annualized, this would only get us 2%. So we would need a minimum of 33 cents. So if we could get 33 cents, that would get us 30% annualized. And so for us, this is what we are looking for. Now you might say, well, bird in the hand versus two in the bush, why don't you take what you can get? And this is where, when the market rebounds, right? I mean, this is where you leave quite a lot of money on the table. So this is where for us, we're keeping an eye on this and see if here we can get at some point the 33 cents again. And all we need to do is a little bit push higher, right, Mark?
Yeah, and that's if we do sell calls at such a low price and there is a pop, it could be that we take pennies and we miss out on dollars, right? So that's really what we're after. We're looking for the move higher where we can sell calls, collect that really nice premium, bringing our break even down.
Right. So this is why right now we are kind of in a wait and hold pattern, like the overall market, and we want to see that it pushes a little bit higher. And this is where whether we take TPR or we take Nvidia or Budweiser or Mastercard, we just sold puts here. This is why we are waiting until we get our 30% annualized. That is a threshold that we set for yourself. Now, for you, it might be different, whatever you choose to get, but we are looking to make at least 30% per year annualized on the money that we are risking in the markets here.
That's the plan.
All right, cool. If you would like to know more about this and about all this call selling thing, I'll link to a video right now where I explain this in more detail of how exactly we do this and what happens here, when do we roll calls. So take a look at this, and then we'll see you again tomorrow morning, bright and early.
Happy trading, everybody.